The Index of Industrial Production, or IIP, is a crucial economic indicator for India. It acts like a barometer, measuring the performance of major industrial sectors within the country. This index provides valuable insights into how much these industries are producing, indicating whether they are growing or slowing down. Think of it as a health checkup for our industries. Just like a doctor monitors vital signs, the IIP tracks the health of key sectors that drive our economy. It helps us understand if our factories and manufacturing units are buzzing with activity or experiencing a slowdown. The IIP is released every month by the National Statistical Office, or NSO, providing a snapshot of industrial activity. This information is eagerly awaited by policymakers, businesses, and investors alike. By analyzing the IIP, they can make informed decisions about investments, production plans, and economic policies. Understanding the IIP is like having your finger on the pulse of India's industrial heartbeat. It provides valuable information about the overall health and direction of our economy. The IIP holds immense significance for both the Indian economy and our everyday lives. For the economy, it serves as a key indicator of industrial growth, which directly impacts overall economic growth. A healthy IIP signifies increased production, leading to higher GDP growth, job creation, and improved living standards. But its relevance goes beyond macroeconomic indicators. The IIP has a direct impact on our daily lives as well. A rising IIP generally translates to more goods being produced. This can mean a wider variety of products available in the market, potentially at lower prices, benefiting consumers. Conversely, a decline in the IIP can signal trouble. It might suggest factories are cutting back production, potentially leading to job losses and a slowdown in the economy. This could ultimately result in fewer choices for consumers and potentially higher prices. Therefore, understanding the IIP is not just for economists and policymakers. It empowers every citizen to gauge the health of the economy and anticipate how it might affect their own lives. To calculate the IIP, a base year is used as a reference point. Currently, the base year is 2011 to 12. The performance of different industries is compared to this base year to determine the growth or decline in production. The IIP is calculated by tracking the output of various goods across three broad sectors: mining, manufacturing, and electricity. Each sector is assigned a weight based on its contribution to the overall industrial production. Manufacturing, being the largest sector, carries the highest weight. The data for the IIP is collected from various sources, including industry associations and government agencies. This data is then compiled and analyzed by the NSO to arrive at the final IIP number. Reading the IIP is like deciphering a code that reveals the state of India's industries. For instance, if the IIP for a particular month is 120, it means that industrial production has increased by 20% compared to the base year. Conversely, an IIP of 90 indicates a 10% decline in production. The IIP data is released on a monthly basis, allowing for close monitoring of industrial performance. A consistent upward trend in the IIP suggests robust industrial growth, which is a positive sign for the economy. On the other hand, a prolonged downward trend could be a cause for concern, signaling a potential slowdown. By keeping an eye on the IIP, we can gain valuable insights into the health of India's industrial sector and its impact on the overall economy. Whether you are an investor, a business owner, or simply a concerned citizen, understanding the IIP can empower you to make informed decisions in your respective domains.